there we go with a trading plan checklist, and we have a triple threat match in here with the Queen Sukba and the Wizard Cam. So we will guide you over this beautiful trading plan checklist of what you should do and what you should have done already before you starting obviously your whole trading journey. It's a little check mark for you or checklist for you, so you can literally check every box off to see if you're on the right track or not. So Cam, what do we have in this beautiful trading plan checklist right here?
So we have four separate checklists that you want to make your way through. Obviously starting in the top left and then going to the top right, bottom left, bottom right. And so obviously we're going to start off with actually making the trading plan. Some of you are going to not be able to trade all sessions, so you need to pick your session and timing that you want to trade, and then combine that also with the cup trade or preferred setup that you'd like to trade. Obviously, in the previous weeks, we've gone a lot through the entry approaches, and I think by now a lot of you should be sort of have a feel for maybe a specific entry approach or approaches that you want to focus on. Maybe you want to focus on entry approach 2 or entry approach 2 and 3. Obviously, that is quite important that you learn to master a single one before you, or maybe, one or two before you move on. And then obviously the risk management tool, you need to get comfortable with that. You need to pick one. There's no point if you're using both the execution helper and the trade assistant. You need to only be using one and getting comfortable with just that one. So Reem, do you want to go over?
Yeah, no, exactly as you said. Like, for example, just to give you the example, okay, for fact you only can trade New York, then again, you should pick your New York time windows, and obviously you preferred cup trades for that specific reason, right? And then you just check these boxes literally, and if you haven't, for whatever reason, picked your preferred session to trade, then that's the last point you should do it, right? You already should have done that quite a while ago, but then just check it. So this is done, and then stick to your preferred session, right? Same for the cup trade, and as Cam said, also for the entry approach. You have to make sure that you picked your preferred entry approach and then stick to it and also practice it. Same with the risk management tool, as Cam said. You can't choose them both. You have to choose one. If you haven't chosen one or whatever overall, then do it. But why you don't choose one? Like, you have to use one risk management tool, or maybe you use a completely external third one. That's also fine. But then at least pick a risk management tool you use, and then check off all these 4 boxes. And only if you checked off all these 4 boxes and did you pick on the left top corner, then you go to the top right corner and Sukba, what do we have there? What do they have to check in this columns there?
We have the solidification aspect. So this will be, did you practice? Now it's really, really important at this stage. You've got all the information and knowledge in lit, and now you have to apply it to everything. So that would require 50 full markups.
At least. Right? At least 50.
Then
you check this box when you have 50. Then I have make my 50. But that's not like you have to make 50 and then stop it. No, that's the minimum thing you should do. And then you check it. 50 is not that much anyways.
Yeah, it's not.
You can literally do 50 in a day. If you literally go over one day over 5 currency pairs, that's already like 5 full days. And we're talking about markups now of the setup, right? So if you only trade the cup trade setup, okay, if you have 5 currency pairs a day and you're only focusing on the London Cup trade, okay, that you technically already should have 5, and then you can do whatever 10 other days easily like that. Okay, you can literally do all these markups in one day if you really wanted to. If you go on trading with replay mode or something like that, that's an easy task. But at least do 50 of your preferred setup you chose earlier, right?
Lovely. So we have then your next task. That will be 2 weeks of replay mode. So that will be in back testing. Now this is key because it will help you understand then the live market or on edge training. And that will be 2 weeks worth. Choose your pairs, whatever it be. And then we have 2 weeks.
Maybe to interrupt Sukba here, the 2 weeks, that means also not like 2 weeks, like in terms of 5 training days and another 5 training days, like technically
Weekends.
10 trading days in replay mode. It means 2 weeks overall practicing, right? You practicing Monday, Tuesday, like the whole week through for 2 weeks, actually every day for 2 weeks in a row, right? That's what it means. Not like 10 trading days in replay mode, but 2 weeks in terms of literally time. You should spend 2 weeks just back testing in replay mode, getting used to, again, your session, your cup trades, your entry approaches, and technically maybe you can even play around in MetaTrader with your trading execution helper, or like with the trade assistant. You can do that also, right? And also do the markups on top of it, obviously, anyways. So you're kind of hitting 2 birds with 1 stone anyways.
Okay, so then we have the same applies for this next one, which is the 2 weeks of live on edge practice. And that will be in the live market, as you can see the word live. So that will require, of course, practicing. Don't use real money, just trade demo or paper trading, whatever it be. But it's important to gauge yourself towards the understanding of how the live market works with the lit trading. And what's key for that is psychology and patience. And I think that's probably the biggest factor here, why you want to do live practice before you actually delve into the real market and real money, should I say. And then on top of that, your last part of your practice in this case would be 15 trades of your chosen entry approach. Now, if you remember, your entry approaches were between 1 to 4. Now, again, choose if you have 1, or if you like maybe 2, then choose between 2, but at least choose 15 trades taken of your chosen entry approach, like such. So if Reem wants to continue with, did you create?
Yeah, just for the 15 trades taken in your chosen entry approach, again, that's easily doable. Even if you stick to cup trades only, then at least practice the entry approaches. Again, if you chose limit orders, the first one, that would be a little bit harder. But if you chose, for example, LETs, there's like, if you just look at mini cycles and then wait for the LET after mini cycle, for example, there's like a lot of them on a daily basis, a lot of them. Same thing for EDMs, you just have to wait for a completed cycle before. But if you strictly stick to cup trades, then there's only 1 for every session, right? There's 1 LET for the London cup trade, there's 1 LET for the New York cup trade, not more, right? So just be aware of those. So there's 15, depending on how you want to use them, if you stick them to cup trades or if you stick them with overall approach, because again, you can trade multiple mini cycles a day if you really wanted to do so. Then you also can practice your LETs and EDMs. But if you want to specific cup trades, then technically maximum, if you can trade London and New York, you will get 2 LETs and 2 EDMs, 1 for London, 1 for New York trap technically, and the same thing for the EDMs, right? So technically overall 4 picture perfect LET or EDM entries for 1 pair. If you stick to the cup trades, that's it, right? So that takes you a little bit longer. Maybe you cannot do it in 2 weeks of live trading, but again, sometimes you will also miss opportunities, but that's also part of the learning experience of how to see and get used to the live markets overall. Is that correct, Cam?
Yeah, absolutely spot on. But I just wanted to add one more thing. With the entry approaches, that's per entry approach. So if you pick 2, then you're going to have to end up doing
correct
30. It's not if you. So this is why if you're only going to pick 1, you'll have to end up doing like less overall. But if you pick 2, you are going to have to do 15 of each, because we don't want you like skipping, like cutting corners or anything like that. We want, building a proper solid foundation, not building a shaky foundation.
And it's for your own
like
confidence, obviously, as well. So you have to learn and really get confident and getting used to taking these entry approaches, like with the snip of a finger, before you obviously risk real money into it. That's common sense, right? So you have to practice it a lot before, and then once you took, like again, we can promise you, if you took 15 of those entry approaches every single time with exactly the step-by-step guidelines and checklists, you will take the 16th trade with real money just like nothing, because you're so used to it. And that should take you, again, 2 or more weeks of live practice. And that nothing will gonna stop you after you did those practice. It will be hard if you don't do that and then be like, oh, let me open like a new prop firm account and try it right away, because you're not used to it yet. Like, what do you expect? Okay, so put in the work first. Practice. Again, we have the saying, we said a lot of times, practice more in training, bleed less in a fight. That's exactly what it is for. So 15 is the minimum you should do live. Again, get used to it in the live market conditions. Again, it's a very big difference of replay mode on hindsight to live. And even not a difficult situation if you're actually putting your hard-earned money or like prop firm accounts onto it, okay? So what do you have today? Create though, Cam.
Obviously, you want to create your trading plan with the options above. So that's going to be your session and timing you want to trade, your cup trade or your preferred setup, and your entry approach or approaches, and then obviously your risk management tool. Then your preferred checklist to follow, which will be going into like I think we'll have the final checklist in week 7, is it?
Yes. So we will add obviously another checklist approach. The funny thing is we'll only give you like trading view. You call it, you can call it templates if you want to say so. So we can see the checklists even literally right in your charts and just even check them there. So there's no more excuses, right? Yeah. So that's what makes it very easy for you to. We don't give it to you right now for obvious reasons because we want to completely spoon-fed everyone. And you should actually create your own checklist and your own personal preferred things, right? But if you don't want to do it for whatever reason, you will get everything like preset from us. But that's not the point. The point is that you understand what you're doing and you putting in a little bit of work yourself at some point also, right? But if you haven't done that yet, do it. And if still not, then you will get it from us in week 7. Okay, so that's technically a pretty good gesture from ourselves as well.
Yeah, and then obviously a daily routine plan. Now, it's important that you know each day, what are you going to do? When are you going to do it? I'm going to trade here to here. I'm going to trade, obviously, my session. But outside of that, when am I going to be backtesting? When am I going to be maybe doing hindsight markups? When am I going to be looking over the trades that I've taken? And that obviously comes into your trade journaling. Now, this is very, very important. Each trade that you take, you should journal. Maybe it's journaling your emotions. How was I feeling at this point? Maybe it's, was this a trade that I should actually have taken? Because you can take a loss and that be a good trade. You know, everything was there. You can take a win and it can be a lucky win. And you don't want to be taking lucky wins. Winning in and of itself is not necessarily a positive. You know, we spoke about this quite a lot, the false positive aspect. You don't want to be buying off equal lows and then because it worked this one time, you're suddenly like, oh yeah, of course, I'll always do that. So you need to be able to catch these things and maybe also how you're feeling emotionally. You know, are you feeling a little bit anxious when you're going into the trades? The reason for that could be you haven't practiced it enough. You don't feel confident enough because you haven't seen it enough. So then you can go, okay, you know, I'm maybe not so confident I'm not as confident as I thought I was with my preferred setup. So I'm going to go and do another X amount of markup so that I can see it again and again and again. Or maybe maybe you've jumped into live too quickly and, you know, you're using your real money and maybe you should hop back and be like, okay, I'm feeling the effect. I don't want to lose my money. So what I'm going to do is I'm going to take away that. I'm going to go back to demo until I really am confident in these setups. And then I won't feel as bad or as anxious when I'm trading them live. And then, of course,
essential actually. It's way more important than you maybe at this point think it is, because even again, as Cam said, it can be emotional based. It can be maybe you even spot like a common mistake you always did overall, which you maybe didn't realize when you wouldn't write down the journals, right? Or overall your trades. Again, for us all of in here, right? We have like thousands of trades literally completely screenshotted from start to begin. If you look back, whatever years ago, I literally printed out my charts, my markups, everything. I had like thousands, and I had folders, fat ass folders of physical printed out charts. Okay, so now ask yourself, okay, how many physical folders do you have of chart markups? Probably not that much. How many literally markups did you just screenshot alone? Maybe you screenshot a few. Maybe you have 15 markups overall you made, like fully detailed markups because you had to do them for the tasks. But guess what? You don't do them for the tasks to surpass the other weeks. You should do them for your own benefit. So you can learn and actually practice your own markups, and then also on the edge markups, as Cam said, and then journal and write down your thought process in that moment. Okay, I had this and this and this reasons. I had this and this and this emotional state. There's a very good also app about that, Cam. That's the Trading Vault, right?
Yeah, Trading Vault.
So you can check that out. That's just Trading Vault. Just Google it. It's a very nice tool. You're not related to them, even if you have a vault as well. It's kind of a coincidence that they call Trading Vault as well. But yeah, they're really cool. If you can check that out, just Google Trading Vault, and it's like a really nice trade journaling software for your benefits you can use for sure. And we highly recommend that also, especially if in the beginning stages and in the learning stage, because you want to learn exactly, okay, what's your common mistakes, what's your strengths, what's your weaknesses, where you messing up, okay, what maybe works better for you, what doesn't work better for you. And yeah, just learn out of the trades you took. What else do we have, Sakura?
For the next one, we have the entry and exit rules. Now, this is important to understand that you have a system in place of when you enter the market. So that will be based, for example, on timings. And then the exits will be based on your TPs. So you take profits, whether that's a liquidity target or targeting a new low. Again, use multiple timeframes to help you identify when you hold your trade to, say, the next liquidity target. And such. So then we have the last one of the did you create, and this is the risk management parameters. So again, this relates back to the risk management tool aspect. So whether you use the execution helper or the trade assistant, understand how it fully works and how you can use it to your advantage. Make sure you have a set parameter, so whatever your percentage risk is, or how you manage your risk based on certain trades using the checklist, for example. If you have certain amounts marked on the checklist, say your checklist you've marked up less, maybe it's not a so confirmed trade, so maybe you have a much less risk on that, as to say if you have a fully marked checklist, then you will risk an average risk that you should do. But it's important you have your set risk parameters in this case for overall trading, I would say.
Yeah. So an entry and exit rules also very important. Again, the normal rules that you already have for like where you should target, but you have to get familiar with what you're trading and what you want to hold it again. So maybe you want to become a swing trader. Perfect. But as you probably noticed already, none of us is really focusing on swing trading too much because we trading for quite a while. And overall, the experience of swing trading is not too good for us because, again, it's not worth for us holding a trade for like 3 days, which technically would have become a 1 to 25, for example, but then you're just holding it to get the break even instead. Yes, you have the chance of getting and catching like higher risk reward trades, but is it worth getting a break even in that intraday perspective too many times if you just completely 100% can close it out at 1 to 15, for example, and find another 1 to 10? Is that maybe better than literally holding and risking a break even to aim for 1 to 25 or something like that? In our opinion, it's not, but Cam can give his opinion about that as well. But yeah, we passed a lot of that, so we stick to intraday trading. What about you, Cam?
Definitely not. Definitely not.
Yeah.
Much prefer intraday trading.
And especially if you go, let's say you found like a mini cycle, okay? A mini cycle inside of a cup trade London. Where should you aim for? You should not aim for a 1 hour high, for example, because you entered based on a mini cycle. So aim for the next mini cycle liquidity target. Same thing if you take a London Cup trade. If it's a normal London Cup trade to the downside or whatever, you have every combination. Okay, then the best target should still be Asia high, right? Not like whatever, like a 4 hour. So you can do that at one point if you combine all the higher time frames in once, right? Then it could make sense. But overall, you're taking still intraday setup, and you should pick a realistic target. Very, very important. Okay, so pick your setup you want to take, and then see what's the most logical target, and don't aim for the fences. Okay, that's the biggest mistake you can do. Should never ever get a break even after you're like a 1 to 10 in profit, and then you're not even making partials or something like that, and you're getting a break even after, yeah, literally up 1 to 10. That's crazy. Okay, so you need to learn that also to not become greedy, but also to stick to your target. It's like kind of contradicting topic, but you have to just stick to your target. Okay, if you have your target of the next liquidity zone, okay, then stick to it. Don't chicken out too early also, but you only will chicken out too early if your target is unrealistic, a little bit too much. Oh, it has to take that out. But again, guess what? If your target is Asia high and Asia high creates a double top and then comes back and stops your break even, okay, that's some break even you can accept, because that should not happen. We had like a crazy example, like what was it, like last week or something, when EU created this quadruple bottom.
Yeah.
Right, and almost everyone got a break even on that. But that was a perfect break even. Everyone has to be fine with it, because the logical target is it should smoke that equal lows, which was at this point even a triple bottom, and then it create a quadruple bottom and then stop everyone out of break even. Okay, but surprise, surprise, next day it smoked that quadruple bottom and obviously reversed after that. So make a rule about access and then stick to it, but don't make it too crazy and then risk a break even on that. Okay, risk management is the same thing. Our recommended risk per trade is, surprise, surprise, 0.25%, right? That's it, 0.25%. Okay, that's what you should risk on a big whatever account, big account. Everything 6 figures is, yeah, you should not go over that. If it's a really good checklist trade, you can risk 0.5%, but not a percent. That's a little bit too crazy. Camsucker, what's your input about that?
Yeah.
I agree with that, based on the checklist, of course.
Exactly.
Maybe if you've got like a smaller account that you're trying to flip, you can get like a little bit crazier. But again, at this point, would not recommend that you guys are trying to flip accounts at this point.
That's what I want to say anyway. So it's better to maybe get into a prop firm if you don't have crazy amount of capital than to try to flip your whatever 1 or 2K account. Guess what? Just get a prop firm account. You will make definitely more out of it than you will ever can do out of a 1K account. Okay.
Yeah.
So again, you should get used to proper risk management, because your goal should be to trade big capital and not like flipping whatever 1K accounts. That's not the point of trading, is it? So you want to use professional money and obviously trade professional. So that's how you have to get used to proper risk management. And obviously, even if you start small with it, at least you know exactly the process of using the execution helper or like the trade assistant, how to do these things. And maybe even you start getting into the copying to other accounts over as well. That's what we all do. We have like one account we trade off, and then we have multiple other accounts we copy our trades in, because again, you cannot manage like whatever 5 to 10 accounts simultaneously if you don't copy them over. So you can get used to that slowly but surely as well. But of course, before you do that, first you have to be consistent with one account and obviously get your profits regularly, and then you can think about that. So for the last row in here of the trading plan, what do we have? Who wants to cover it?
Yeah, I can. So for every trade, now this is every trade that you take, do you honestly, and you have to be honest with yourself, do you always follow your guidelines and checklists? Do you always stick to your risk parameters? Or is it a case of, you maybe lose a trade, you get a bit emotional, oh yeah, sure, I'll increase it, why not? That's not what we want to be doing. We want to be consistent. Even if you're on demo, the things that you are practicing on demo are the habits that you're going to take up when you are on live. So you still have to take them very seriously. Are you sticking to your trading plan? Or, like Reem said, are you maybe swinging for the fences with your TPs? Or are you getting scared and taking your TPs off too soon? Before you take a trade, are you properly marking it up so that you understand what you see? You're not just coming to the charts, oh yeah, inducement low, so now I'm going to buy, right? You're not doing that. You're making sure that you have the proper markup, because maybe when you look to the left, you're like, oh, actually, there's equal lows here and we're reacting off liquidity. This is not a buy that I should take. So are you putting yourself in a proper position to take the trade?
Yeah, even going further than that as well, right? Not only like, oh, inducement low, I will gonna buy, as Cam said. No, like go the step further. What cycle variation could it be? Overall daily cycle variation. Can we expect a London knockout? Can we expect a retail heaven? right? Because that's two very big differences. If you like getting into an inducement low trade, but aiming for a London knockup, but in reality it turns out to be a retail heaven. You should know these things before, and that's like beforehand the day even starts. We showed you in the how to pick the cycle variations before they even happen master guide video a lot of times, right? You should have a good understanding of what to expect for the day. And that would also help you picking the right target for it, right? So make sure you do all these things before you get to the charts and you have a proper markup before you even consider taking a trade. Because again, the last thing you want to know or want to see is that, oh, okay, inducement low, okay, take an entry. Where's the other 15 points you should have checked on your trading plan? If you're just trading an inducement and waiting for a let, guess what? You will not gonna get too crazy results out of that. Because there's like 500 other things we do on top of that. Okay, so if you're being lazy and don't want to put in all the work, then you're kind of predicting your own future there already. Okay, so but if you do everything proper and follow all the steps and your markup look pretty good and you know exactly what to expect, and then you can react to it with your checklist, with your risk management, and always stick to the same rules, that's where I think it's gonna be very exciting. Okay, so then last point maybe, Sakba?
Yes, so that will be make sure you set the target realistically. Now, this again relates to the aspect of your exit rules. For example, let's just say London close, and you've entered a trade on London close, and then you have a target, right? Now, you have to be even more realistic with London close, because at this point, the volatility will become much less. And then you likely will be in a range, then leading into Asia range, and then you basically are becoming the liquidity. And at this point, if you were holding it, which isn't smart at all, and you shouldn't be doing that, then you likely will be taken out maybe the next day with an inducement in the opposite direction of your trade. So again, it's really important to be realistic, whether it's the lows or the liquidity, see what price is gearing towards in that sense. So you mark up your build-ups and you mark up the smart money traps, for example. So maybe you have to close at these so-called POIs, as price may range around these areas or react from it. So yeah, with that being said, we also have the final point here, and that would be make screenshots and put them in your journal. And this is really important for the longevity of your journey, and that will be having the overall journey, well, journal, should I say, where you have the whole backlog of all the trades you've taken. And this is key as you progress over the months and then the years, of how you can look back on your trades and then see if you're making improvements or what have you changed. And you always have a guide to look back on. And that's really, really important in my opinion.
Really?
Yeah, so overall, we have the training plan checklist. That's the things you should check anyways, regardless of what you do. That's all the points. Everything, every box in here should have a check in there, other than for every trade you do. Like for every trade you do, that's ongoing. And obviously every trade you take, you see, do I follow my guidelines and checklists right now? Or do I just saw someone taking a sell trade and I'd be like, oh yeah, inducement low, inducement high, I take the sell as well. Is that what you're doing? Or are you literally checking off all your boxes? Okay, I had my build up, I had my inducement, I had this and this, 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 and now I'm waiting for this and this, and I'm getting this and this. Perfect, and I take it. See the difference of that? It's like very significant difference. Then stick to your risk parameters. Okay, now do I literally just open like 10 lots randomly, or do I literally let the the execution helper calculate my perfect 0.25% risk, or I'm risking completely something different for every trade because it looked bad or something like that? No, stick consistent to your risk management. If it's a perfect cup trade, go for 0.5%. If you're trading something in the middle, go for 0.25. Okay, and then stick to your trading plan. Okay, do I'm trading Asia now? Because I randomly woke up because I had dreams about like success, and then I'll randomly wake up like, oh, I open the charts and I'm right in Asia range. Oh my God, build up inducement, I have to take it. Is that your trading plan you made for yourself? Or you're just randomly making shit up now? Again, is it not an EDM trade, but you only want to trade EDM trades? Or Is it exactly the trade on your trading plan you're taking? Yes, I check it then. Okay, perfect. Then make a full markup before it. Where's your markup? Do you see a markup on your chart? Is it there? Oh, okay. Is it detailed also? Yes, it is. Do you understand or expect a specific cycle variation in terms of daily cycle? Yes. Okay, then check. Make a full markup before taking it. Perfect. Right? And then where's your target? You should know that before. Did you set a realistic target also? A realistic target. Not like where you want market to go, where you think it will go. No, what's a realistic target that might gonna be hit? Did you set it? Okay, then check it. And then you make a screenshot of your overall thought process on the edge before you took it. Boom. And then you can execute the trade and obviously whatever. Also, even execute the trade or have a limit on anyways, right? That's again depending on your entry and exit rules. Technically only entry rules if you want to market execute with the execution helper or the trade assistant, or if you want to run the limits, right? That's obviously the different scenario you can do. But you have to know that stuff before, and obviously then check everything for every single trade over and over again. Yes, it is a little bit a lot of things to do, but it's necessary things. And at some point, these things will get so fluent that you will not need them anyways. But for the beginning, to get used to it, just check these boxes, and that already higher your success rate a lot. Okay, so that's the trading plan checklist. Make sure every box is checked every time. Have fun using it, and we will catch up very soon.